Yeah, so this week has definitely been one of the more volatile weeks in the market, and this has certainly put pressure on interest rates. Some of the key inflation numbers have come in super high, the highest that we've seen since 1982. So, inflation that the Fed originally thought was transitory looks like it's here to stay, and it's something that the Fed definitely is going to need to address. So, the interesting thing and what the market is trying to interpret and figure out, I think it's certain that the Fed is going to be raising short-term interest rates, but the real question is how soon, how much, and how many rate hikes are they going to have? And this has definitely put pressure on long-term interest rates. And I think it's important for people to reach out to their loan officer. Any of the loan officers at First Equity can certainly help you understand and digest this information. In the short term, this inflation talk has caused 30-year fixed rates to increase, but you'll see down the road as the Fed does start to hike rates, these are short-term interest rates. And I think a big misconception in the market is what the impact is of that on longer term rates. And historically speaking, we've seen that when the Fed does raise short term rates, it could have an impact on actually bringing longer term interest rates down. So in the short term, it's certainly volatile and we're seeing rates move more than they normally do. So I think it's important for you to talk to your loan officer so they could help explain what's going on with the market and how to navigate and get you through this time.
Yeah, it's probably one of the craziest weeks we've had in a while. Inflation is through the roof, as everybody can kind of see. Everything from groceries to rent to cars, in prices have increased dramatically, and that's putting a tremendous amount of pressure on the Fed to raise rates, or in a very much a rising rate environment. And particularly on the short end of the curve, it was extremely steep in terms of rates rising this week.
There's still going to be a lot of pent-up demand for people buying their own personal residences. We were just talking about this yesterday, where just the demographics of the number of people who are now looking to buy their first home really outweighs the available inventory that's out there. So, as far as the conventional loans go, there's a lot of backed up demand there. And then on the investor side, we really haven't seen a slowdown here at First Equity. I mean, as bridge lending seems to be picking back up, more and more borrowers are doing more fix and flips than we had seen probably last year. And then rentals are as hot as ever, both short-term rentals for the Airbnb type stuff, as well as more traditional annual rentals with longer-term tenants.
Big week, a lot of volatility right now in the market, so it's just about getting in front of that and discussing that with your borrowers and kind of coming up with ways to get around that, and having the conversation of strategy. Is it about rate? With a lot of these 30-year loans that we're doing, tenants are paying these mortgages down. That's the secret. That's the the cash flow of it. So higher rates, little less cash flow, but gives you access to some equity in the property that you may not have had a couple of years ago, and maybe free up some cash for making future purchases later on this year as things starting to plateau or hopefully level out over the next couple months.